Hello and welcome, guys. We are welcoming to Daily Dose of Fact. In this video, we will discuss what is insurance, definition, how it works, and main type of policies. So, none of us know exactly what the future holds for us. Emergencies such as illness, accidents, and even death do not knock the doors, rather, they arrive quite suddenly and unexpectedly. Here insurance plays a major role as it protects you and family financially in case of occurrence of any such unfortunate events. Let's take a closer look at what insurance is, its plentiful benefits and also the types of insurance available in any country. So what is insurance? Insurance is a legal contract between the injured individual or company who take the policy and the insurer company which provides insurance, where the latter pays the specific amount of money to the former in case of any unfortunate event or crisis arises, such as sudden demise, accidental injuries, damage to vehicle or house, etc. To avail the benefits of insurance, the insured is supposed to pay a regular amount of money to the insurer, which is known as premium. Premium is described as the predefined amount which is borne by the policyholder to receive a certain amount of insurance coverage. It is a kind of fee that can be paid at one go, or on a monthly, quarterly, half-yearly, or yearly basis during the premium payment term of insurance policy. Simply put, the concept of insurance is very elementary when you possess something valuable that you cannot afford to pay if it gets lost or damaged. Then you are required to take insurance. By paying for insurance, you certainly receive that peace of mind that if something goes wrong, the insurance company will mitigate the loss without impacting your finances. Key takeaways. Let's discuss its key takeaways. Insurance is a legal agreement between two parties, the insurer and the insured. The insurer offers financial coverage to the insured for the losses that they might bear under certain unfortunate events or circumstances. The insured pays a certain amount called premium to the insurer against which the former receives the insurance cover. Now let's discuss how does insurance work. Insurance is one of the most effective ways of shielding yourself and your family from a financial loss which could rip off your entire lifetime savings. To get this work, the insured and the insurer get into a legal contract for the insurance policy. This insurance policy spells out clearly about the various terms and conditions under which the insurance company is required to pay out the coverage either to the policyholder or their beneficiaries. So, in case of any unfortunate demise or other eventualities, the insured or beneficiary can file a claim with insurance company, and based on their final approval, the insurancer settles the claim. As stated above, the policyholder is required to pay a certain amount of a premium on a recurring basis to the insurance coverage. The higher the sum assured, the lesser is the premium. The insurance provider provides a high insurance against a trivial amount of premium as very few insured actually end up claiming the insurance. This is the reason why insurance companies take the risk of offer you a high amount of coverage at a low price. Also, the insurance company have numerous clients and all of them pay premium. It is to be noted that not every policyholder faces loss at the same time. Now let's discuss what are the main types of insurance policy. Insurance in any country can be broadly divided into the following two categories. Life insurance, as the name suggests, life insurance holder is a policy which wants take on their life. The policyholder purchases a life insurance policy so that their dependent gets financial backup or security even if you are not there. Life insurance becomes extremely important, especially when you are the sole breadwinner of your family. Under life insurance, the policyholder's entire family is compensated financially in case of any policyholder dies during the term of the policy. There are several variants of life insurance policies like term insurance, endowment plans, retirement policy, children plan, or unit linked investment or ULIPs plan. Certainly, plans only offer death benefits, and some also provide maturity and survival benefits along with just life coverage. In fact, plans like investment plans also allow you to create a saving corpus for the long term goals along with life coverage. In the next video, we will discuss the other types of insurance. If you like the video, please comment in the comment section and please subscribe our channel for more information regarding any topic. Have a great day. Bye bye.